Right, let's kick this off. Thanks very much for everyone for attending. So the webinar today is how to trade the DAX. So the DAX, or the Germany 30 index, as it's traded with London Capital Group, is one of the most popular stock indices to trade. In fact, you'll see it listed in our popular indices category, popular products category on the LCG Trader platform, which we'll have a look at a little bit later. It's considered a benchmark for the European stock market performance, so it's often quoted in the financial media. You know, the DAX is up or down, kind of tells you if European stock market's up or down. And incidentally, traders often cite it as one of the best indices to apply technical analysis to. We'll get into that a bit more towards the end. So the general idea of this presentation today is that we're going to kind of try and just understand what it is we could be trading here. If it is, if you do want to be trading the DAX, what is it? You know, what's all the information that you need at hand, and then just a little bit about what the index is like to trade towards the end with a look at the trading platform. So just what is the DAX? It's the 30 largest and best performing companies, known as the blue chips on the Frankfurt Stock Exchange, so Germany's stock exchange in Frankfurt, obviously. It's the best known index, often seen as a benchmark for the German equity market, but also European equities, I'd argue, to some extent as well. The main function of the DAX is to provide investors with investments in the Germany equity market via derivatives. So obviously the DAX index itself is a futures product. When you're trading it with LCG, you're trading a CFD or a spread bet on that futures product. So the 30 stocks contained within the DAX represent about 80% of the market capital authorized in Germany. So even though it's only 30 companies, those 30 companies are so huge that they still represent about 80% of all the public equity out there in Germany. So obviously quite a concentrated set of companies that dominate Germany, but that's not unusual. It's similar in the likes of the UK, or to a lesser degree the US, because it's such a huge economy, but a lot of the European countries as well. Now, how's it designed? Save this, have a little read through in more detail later, but the upshot of this was that just to kind of explaining where all why are certain shares allowed on the index and how is it computed? Well, obviously they need a certain amount of turnover on their shares for them to qualify to go in the DAX index. So it's no good being a huge company, but no one trades your shares. Generally that doesn't happen. Obviously the two are kind of related, but you need a certain turnover on your order book, on the etc., which run the DAX to qualify. And you need to qualify to trade on the DAX, you need a certain amount of the ownership of the company to be free floating in the market. So if you've floated only 2% of the value of your company, that's not going to cut it for trading on the DAX index. You need to be a bit more of an open, available company for trading. All the companies need to have headquarters or operating headquarters in Germany, and must continuously trade on, etc. Foreign companies can be admitted, but there aren't any at the moment, I believe. And then the other bit of information relevant for trading. Now the time listed here is actually in European Central Time, I believe. So 9:06 a.m. Is when it kicks off in Frankfurt, but actually if you're in London, that's 7 a.m. Quick note that it's known as a performance index. That's just by the way the shares are weighted within the index. It's not equally weighted, 30 companies, and how they do. If one of the 30 index goes up 1%, that's just the same effect as any other company in the index going up 1%. No, they're weighted according to how well they've performed in recent periods. So, if your company, if the shares are performing better on the DAX, you'll actually have a greater greater impact on the overall movement of the index. So obviously slightly that does sort of budge the index in the favor of the companies that are outperforming. It doesn't include dividends. They're all reinvested into the performance, and it's price weighted. So enough of all that stuff. Quick on, these are the top 10 companies listed on the DAX. Just interesting in terms of, if you are keeping an eye on the news flow and what it's going to be showing you when you're trading the DAX. Obviously, having a look at this, Siemens, ticker symbol SIE, its index weighting is over 10%. So clearly, if something dramatic happens to the shares of Siemens, or even something not too dramatic, it's going to affect the German DAX. Likewise, Bayer, SAP, and so the other companies that you see in this list, Daimler, obviously, the DAX struggled a bit when Volkswagen were in trouble. These car makers do have a big impact on the index. So car makers, chemicals, industrials tend to be what dominate the DAX, which is different to, say, if you're trading the S&P 500, that's dominated by technology, and if you're trading the FTSE 100 in the UK, that's a bit more dominated by banks and mining companies. So it's good to be aware of the important industries and how these indexes are weighted if you are following news. If there's bad news for chemicals, the chemical industry, bad news generally for industrial companies, whatever the case is, good news for automakers, then that's going to positively impact the index. And actually, just incidentally, yesterday the DAX was one of the outperformers because China loosened up their regulations on how foreign ownership is allowed in Chinese manufacturers. So there's big automaker presence in China. The Chinese car market's really booming. All these European car makers trying to get in there. Obviously, the likes of Daimler, their shares were big risers yesterday. So what actually impacts the DAX on a day-to-day basis when you're looking to go long or short the DAX for how much? What are you factoring in here? Well, we're in a global market these days, so generally the DAX will rise alongside the likes of Wall Street, the UK 100, the France 40. These are the LCG proxies for the other big benchmarks across the world. So generally when the S&P 500 goes up, the FTSE 100 goes up, the CAC 40 in France, when all these are moving in sync, generally people are looking to take risk across the globe. And all these the performance of all these markets affect each other. So if Wall Street closed up, good chance European markets open up. If something dramatic happens in Asia and Asian markets turn down, good chance it might affect the risk sentiment for when the German DAX opens. Now, the DAX is particularly sensitive to the value of the euro. Now, this varies in how strong the correlation is, but generally, the rule here and why it does is that a stronger euro makes German exports less competitive. Germany is a big exporter. They have a huge current account surplus because they do a lot more exporting than they do importing. And so these big multinationals listed on the DAX, they're very sensitive to how competitive their prices are when they're selling all these goods and services abroad. So generally speaking, if the euro goes up, DAX down, it's obviously not quite as black and white as that. If the euro's up or down a couple of points, it's not really going to be here or there in terms of the effect on the DAX. If there's something dramatic happening with the euro jumps up 1 or 2%, the DAX is going to struggle. which is ironic in a way, because you'd think that, say, good economic data that sends the euro higher, you would think that would drive the DAX higher as well, but often in case it's not the case. So I wouldn't say look necessarily at economic data as something important for driving the DAX index. It's generally not. That's more important for currency markets. So a bit relevant at the moment, as we sit here in April 2018, a trade war potentially being kicked off with between the United States and China, but also Europe had been in the firing line a bit. Again, going back to automakers, which do make a big chunk of the DAX, Donald Trump specifically named them as potential targets for tariffs. So again, because these companies are big exporters, that negative news overly affects the DAX. If the price of oil can affect as well. Obviously, oil used a big chunk in terms of a cost in the supply chain, particularly for industrial chemical companies. So the price of oil is going up, their cost of them doing business goes up as well. The only other impact is that oil prices going up can reflect global demand in a strong economy. So obviously, a strong economy is good for stock prices, particularly for a very international index like the DAX. But for that reason, good to look out for the performance of the US, Chinese and other European economies. They are destinations for these German goods. If these markets are suffering, they're not going to demand German goods as much, and so the likely earnings of these companies, which at the end of the day is what's underneath this index, these 30 companies there, the expectations for those earnings are going to drop. So on to that point, company earnings, generally we need the expectation that average earnings for all 30 companies on the index will rise in the next 12 months in order for the price of the index to rise. So obviously that's an average, so some companies could be doing very badly, some companies could be doing very well, but as long as on the average we're expecting the earnings to go up, that sets the framework for the price of the index to go higher. But obviously there will be periods when the market goes down, even though earnings expectations are on the rise. Now I've got a good chart to demonstrate that here, pulled off from Standard & Poor's. So what this is showing is that obviously that red line is the DAX index since 2007, leading in through the early parts of 2018 as we currently stand. And these blue lines, they basically represent forward earnings expectations and valuations. So as you can see, all these lines move up in sync together. That's because the general trend of these lines reflects the fact that earnings are expected to rise over the next 12 months. But valuations, this is at 14 times a PE ratio of 14, 10 and 6. So at the moment, yes, the index is rising overall because earnings expectations are rising, but it's quite richly valued. So how much the price, the kind of back to what a PE means. I mean, how relative the price is to the earnings expectation. Well, the price is quite high at the moment relative to the earnings expectation. If it comes down to 10, it's obviously a bit more middle of the range. If it's 6, the markets are very cheap. So not a great shocker here, obviously. Markets are quite overvalued as we currently stand. Should you be reviewing this webinar recording in a few months' time and the DAX is down below 10,000, then you can obviously see it's a bit more of a kind of acceptable valuation for these higher earnings that we're expecting. Maybe at that point, future earnings expectations are dropping, then you obviously have to reconsider that situation. But if people still expect the same level of earnings, but the price of the index is lower, obviously you're getting a bargain. So just something to consider here for when trading the DAX, volatility. The DAX is one of the more volatile markets, and I think that is to some extent why it's popular. as a trading market. I've heard many people say it's easier to trade than the FTSE. One reason for that is that the price is higher. So obviously if the value of the index at the moment is 12,000, say for example the FTSE it's 7,000, well you'd expect double the amount of points movement in a day, right? So you can see here that the average true range, a fairly good indication for volatility and the number of points you can expect to move in a 24-hour period. It's not quite the same as the true range, which is just the daily range, but this is generally more widely followed, better indication. 190 points it is at the moment. Now volatility is a bit elevated at the moment, but generally speaking at the moment as we stand, over the past 14 days, the average price movement you can expect in one day on the DAX is about 190 points. So you know, if you're trying to keep your stop loss outside of the daily range, you know, you're looking at stops 120 to 200 points. So swing trading, long-term position trading, you know, requires, you know, if you are betting, for example, £1 a point in spread betting, you know, you're looking at a stop loss around £200. If you're trading CFDs, equally, you know, the minimum contract sizes, which we'll get into a little bit when we look at the platform, it's going to come out around similar, where you're probably looking at, say, €200 or so in terms of the normal contracts you'll be trading as a stop loss amount based on that average true range. So that is a consideration. If you're looking to risk a small percentage of your account and to do some swing trading on a longer term basis, keep in mind that you'll need just a certain amount in your account to be able to, in effect, afford to trade the DAX. Just wanted to touch quickly on, so this, I mentioned before that obviously these indices are all futures contracts, and so just wanted to show here that it's up there in terms of some of the most popular indices. I don't think this is naturally a normal state of play, but you can see it's actually behind the CAC 40. This is based on, you know, not an end of day figure for volume, but you can see actually the Euro Stoxx 50, even though it's actually one of the, not as popular to trade on the LCG trader platform, because it's not a national index that any particular country kind of refers to in the media. Actually, the trading volumes on the futures contracts are much larger than the DAX or the FTSE, or even like the likes of the CAC, which is from France, or the Spain's IBEX, which is way down there in terms of volume. So why does that matter? Well, just purely from a sort of the spread you'll be paying will just be a little bit wider the lower the volume, and also the intraday price movements can be more erratic when you have thinner volumes. Generally higher volume creates kind of more even price action. So let's just jump over to the LCG trader platform now. At any point if you have any questions, certainly feel free to you know, to ask me. You know, happy to answer them anytime, or obviously just get into it towards the end. All right, let's see. Hold on. There we go. So if I can just put this full screen. So this is so Germany 30, as I mentioned. This is the LCG trader platform, and you can see when you have if you change the layout up here, I've got this into, can switch it all around, but as soon as you get yourself to a layout where you can see the watch lists, you'll see that down here, there it is, Germany 30, and it will show you, as soon as you hover over it, some of the important considerations for when you're trading these indices. So if I click on that here, we look on the information box, that tells us most of what we need to know. So obviously it's quoted in euros. It is, after all, based on German stocks, which are all listed in euros. It's based in Germany, which uses the euro. So no surprise there. The lot size that we use is 10 times the index. So if the price at the moment is 12,500, right, then when you place a trade for one lot, the size of your trade is not 12,500, it's 125, it's 125,000, right, not 12,500. It's an extra 10 times the price. But of course, you don't have to trade one lot. You can, in fact, trade 0.01 of a lot, in which case the value of what you're trading is more like 1,200 euros versus versus that one lot, that one contract size. So there's a fair degree of flexibility here. Market hours, you can see that actually we're pretty much 24-hour trading on the LCG Trader version of the DAX. If you're looking at these, it's pretty much 24/5. But just be aware that trading outside of the normal exchange hours, which we mentioned on the slide, it's just normal sort of working hours in Germany, the volumes will be thinner and the spreads will be wider in those out of hours. But it's certainly good that you've got the option of trading the index then. Gives you access to it, obviously, if there's some breaking news after, after hours or during the non-usual trading hours, then obviously you're there to be able to take advantage of it directly on the index. Yeah, I think that's probably most of what we need to know as far as the information on the product. Probably more details, you can always contact customer services at LCG. A little bit on the chart itself. So obviously there are 1,000,001 trading techniques, so it would be farcical of me to say, oh well, the best trading technique for the DAX is using some sort of trend line technique or some sort of pivot technique. Everyone has different ways of trading that suit them. But back to that idea of the sort of volatility you can expect. If we just take, for example, I was looking at this particular candle here. Now my preference in trading is I tend to prefer more like price action. So for me, my considerations when trading tend to be trend analysis, volatility analysis, and then looking for things like candlesticks at support and resistance levels to look for entries into the market in terms of timing, going in the same direction as the trend and accounting for the volatility in the market. Now, lots of people prefer indicators for their triggers, but either way, I think you can make the same point. Look at this large candle here. Now, obviously, this is one of the largest, most ridiculous candles we've got on the chart, but hence it serves the point well. So this in candlestick terms is a bullish engulfing candlestick pattern. So we obviously had a bit large market drop, recovery, another large drop, found support at the old low, and then a huge bullish pattern. So two things in your favor there with the benefit of hindsight, bouncing off a dramatic low point, and then also having been so dramatically lower in the day, actually finishing the day higher than the previous day's high. So that was all quite positive. But if you were, say, entering at the open of the next day of trading and putting your stop loss below the low, from 12,190 down to 11,275, you're looking at, well, a quick bit of maths in the head, but basically about 500 points in terms of a, kind of a safe distance to put your stop loss. Now that is quite considerable. Again, if you're trading roughly a pound a point, a euro a point, maybe you look at 500 pounds or euros or dollars, whatever currency you're using. So that's a bit chunky. So it does limit your options if you've got a smaller account size. Obviously, all good if you've got a few thou in the account. As long as 500 euros or dollars or pounds doesn't represent a huge percent of your account, all good. You can obviously trade this index. But if it does, then you start actually maybe having to consider perhaps a lower time frame for trading. Now, that's all well and good because most day trading by its nature takes place on lower time frames than this daily candlestick chart anyway. So for those who are not familiar, this is a candlestick chart where in this particular candle I was looking at, that's the low of the day, that's the open, that's the close, and then the high is very similar to the close. So all the daily price action represented in the candle, but you can do the same thing for an 1 hour. So we can look at a 1 hour candlestick chart, and you can see here now, instead of being say 190 as it was on the daily chart, actually the average true range now is about 22. So 22 points, obviously a lot more manageable. So from a day trading perspective, you can control your risk a lot more easier. Only risking 20 points, obviously, that would allow you to trade multiple contracts at a time. Again, so long as that fits within your risk parameters. So I've got a couple of indicators on the screen here, one being the Bollinger Band and one being the directional movement system. So Bollinger Band's good representation of volatility. Now we are in a high volatile market at the moment, but I would say generally, and again why the DAX is quite attractive, is you actually do quite a few periods where the market is pushing through into high volatility periods out. So with the Bollinger Band, this is the 20-day average price, and then you've got 2 standard deviations either side of that average. So when the price is up here above 2 standard deviations from the norm, it's unusual price movement. The market's moving more than its average. So you get these quite often. You do get these periods in the DAX where the price is moving outside of its index, and I would say outside of its normal range judged by standard deviation. So from a kind of breakout or trend trading perspective, that's actually what you want to see. If you are more of a trader that's looking for price ranges where you're trading, say in this sort of scenario, where the price has reached the extreme, you sell it, it reaches another extreme, you buy it, looking for that return to the mean kind of strategy. Maybe the DAX is actually not so good as some of the other indices that tend to spend a bit more time in a sideways range than the DAX does actually trends a bit more often. Now a way to show again that it is quite a trendy index, if you look at this directional movement system, which is, I don't know why we've named it that, because generally everyone's familiar with this indicator as being being called the ADX. So just to show you here, if you right click on the chart in the LCG Trader and you go down to indicators, it's nicely categorized by what these indicators are useful for. So trend, and then you go down here to directional movement system, and then you've got the option of the ADX, the DI, plus and minus. And so I've just deselected these two here so that I can only see the ADX. And what that's showing me is that oftentimes the market is in a trending environment, and so 20 generally denotes a trending environment, and below 20 a range. So you can actually see that quite often, based on this kind of 1 hour candle chart, the DAX, I wouldn't say necessarily more of its time in a trend, but a good amount of its time in a kind of trending environment, which again, good for kind of trend following systems, maybe not so good for reversion to the mean systems. Okay, so yeah, I mean, I think, without getting into kind of the nitty gritty of actually specific trading strategies, I think that's a good amount of information for what to know and how to approach the DAX, and some considerations for the kind of strategies you might want to employ, the information you might want to look at. So I hope that was all good. I hope that was useful. Yes, this video will be available to look at on YouTube for review afterwards. And if you like it, obviously share it with any other traders you know. Right, thank you very much for watching, everyone. Much appreciated for you joining today. Good luck with trading for the rest of the day and the week. It's Jasper signing out.